businesses and producers around the world always cheer when US consumer sentiment is in the 80 to 100 zone, as US consumers play a big part in the global economic ecosystem. The United States remains the largest consumer market in the world, but since the pandemic, this index has not recovered above 80. Historically, whenever the consumer sentiment dropped below 80, almost without fail, it usually followed by a crisis. And after the pandemic, it went below 80, and today it still remains below 80, indicating US consumers are still cutting back on their spending. Does it mean that there is a risk economy to enter into a recession? And how can we use this index to time our investments and trades? I'm Kon Hao. My work in this channel is to study behavior science and finance, discover correlations between different markets, and uncover potential opportunities. Before we get into today's subject, please take some time to read the disclaimer. This week, headline caught my attention. It says, Wall Street ends sharply lower on mounting concern over economy and tariffs. Economic data shows US business activity decelerating and consumer sentiment deteriorating. If consumer sentiment is going to affect the stock market due to tariffs, then let's work backwards to examine the tariffs situation. A question: is the tariff situation only at its beginning, or is it easing off? I believe it is the former. It is only at its beginning. As it intensifies, consumer knew in the near future cost of living should continue to increase, and there is a risk that consumer sentiment will remain below 80 level for longer. And that's not good news for the stock market at all. Consumer spending is an ecosystem in the whole financial market. And whenever I analyze the mass consumer behavior, I would like to refer to the Russell 2000 index, which focuses on a large number of mid-sized companies. And I personally coin this Russell 2000 as a mass consumer stock index. And it appeared to be leading the way, and I'll explain why very shortly. Will it cause the rest to follow, the Dow Jones, S&P, and Nasdaq? First, the numbers are already signaling pessimism. But technically, I'm still bullish. So therefore, if I'm going to add both up, the data and the technical, my view is that I am cautiously bullish over the US stock market. And here is how it works. I always love to use technical analysis, and I like to identify what is the main trend line. I call it primary trend line, and also follow with a secondary trend line. So it tracks the micro movement of the monthly chart. So it's a long term. But it makes no sense that if the market is going to come down to break this main trend line, so by then it's maybe could be 15,000 for Nasdaq. So technically it's down 30% from this top to here is down 30%. So I would classify that the bear has arrived. But it makes no sense to wait for the market to drop until 15,000 or the market declare that it's a bear market. And all these indices are interrelated. So what I'm seeing here is that the Russell has already broken below this secondary uptrend line. It also means that would the rest follow subsequently, and we have to keep a very close watch on the development as the data is telling us that it remains pessimistic. So what I'm going to do here is that as we look into the E-mini Russell, how I plot this uptrend line, this secondary uptrend line is that we look at all this significant trough. It is so beautifully supported. And this is a well-supported uptrend line. So means that if it is well-supported, it should not break below. And what we're seeing here that it tested many support line here, including here, it did break, but subsequently kind of went back up and supported again. But in the last few days, it kind of break very convincingly. So what I'm trying to do here is that the Russell seems to have broke this secondary uptrend line. So I'm going to keep a very close watch on the rest of the indices, how it's going to develop, and all the upcoming published data. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on the next move. Stay tuned for my coming tutorial. Remember to subscribe to my channel. Join us in our weekly case study and discussion. Click on my profile icon or description below to find out more. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.